From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for July 18th, 2016. I hope you had a great weekend and are ready to get started trading this week. In today's video, I'm going to do a general overview of each of the U.S. currency pairs in anticipation of this week's trading, and I'm going to highlight some of the key levels that we will look for entry and exit opportunities. Now, we have a relatively quiet news calendar for the day today, but as we go through the rest of the week, each day this week, we have some key events that you'll want to keep an eye on your financial calendars. Let's get started here with the USD CHF, the US dollar versus the Swiss franc. For the past several months, we've been studying this downtrend channel that you're viewing here on the daily time frame, and I'm talking about the two red trend lines that you see, finding resistance at the top, support at the bottom for the past several months, even going back into October, November, and December of last year. So several months in that downtrend channel. Within that period, we've seen rises and falls. You can see the blue trend lines representing the uptrends or the rises within the downtrend channel, the falls within there after capping out at the resistance highs. Well, in the most recent time frame, we've come off the low. We went up, found the resistance at the top of the black line, went down, made a little bit of a higher low along this green trend line, and now over the past few weeks, we've been more in an upward trend pattern with the blue trend line that we see here on the chart. Now, does that mean that we're going to start breaking out higher? That's possible. We could break this and continue to pressure higher. News will likely be the catalyst that will cause it to break this resistance, break this downtrend pattern, and start going higher. If it starts to break through the blue trend line and start to make lower highs, we could make some assumption that we're back inside this pattern that we've been in for the past several months. So definitely watching the top of the trend line for either clues to breakout and continuation higher or reversal for a change in direction and a continuation of the long-term trend pattern. Let's begin zooming in here several times just so we can get a handle on what's been happening over the past few days. Really, the orange shaded area here, 98.10, 97.90 or so, has been support for the past couple of weeks. You can see that here going back several days. This is the daily time frame, so several days going into last week. We've been finding support around that area. So as long as it's above the blue trend line, above that orange shaded area, I don't think you want to go short here on the U.S. franc. More likely, you're looking for opportunities to go long and target back to the resistance highs into the purple shaded area, 98.60 to 98.80. And of course, anytime it breaks above there, that could be the clue or evidence that this is going to continue the uptrend pattern that we're in currently along the blue trend line. Anything underneath that orange zone, if the market decides to turn around and gets back underneath 97.90, then we're back down here into the 97.30-50 level, the yellow shaded area, and anything underneath there. And by the way, the 100 period simple moving average inside of there, we could be looking for it to go even lower and turn back into a downtrend pattern. So clearly an area that we want to watch this week will be between the orange zone here and the purple shaded area as resistance. At the current moment, I believe you want to buy in the direction of the uptrend for the U.S. franc. Let's go ahead and move on over to the euro dollar. Similar situation, yet upside down, truthfully. You zoom it out a little bit here on the daily. In fact, let's go out here to the weekly. We've been studying this in the live daily trade room as well. Downtrend 2014. Since January 2015, we've been stuck inside this red box, this range down here at the bottom. Let's zoom it back down to the daily time frame. There's the rising red trend line within the range. We've come off the top of the range recently in the past several weeks and made our way back down underneath this rising red trend line. We've been sitting just underneath that for the past couple of weeks. Let's go ahead and zoom it in on that black box. Take a look, past couple of weeks. Just been finding resistance at the top of the black box towards the 1.1170, 1200 level, and support down here at the blue shaded area, the bottom of the black box. That's closer towards 1.10,025 to 1.1 down here at the bottom of the chart. 1.1025, 1.1000 is the bottom of the black box, the blue shaded area. Of course, this week and really last week, we've started looking for potential breakouts of this range or period of congestion above the pink shaded area, likely looking for a reversal. But I think more likely what we're looking for is the continuation of the downside. Breaking the 1.1000 level begins the next phase of the downtrend that really, if I zoom out again, you can begin to see here along this trend line here, this green trend line, we're in a more of a predominant downtrend pattern. So the black box is just a period of congestion within that downtrend, and a breakdown of that looks for the continuation lower. So that's what we're going to look for this week. Either rallies to resistance for selling or breaks of support for selling. We zoom it down to the 4-hour time frame. Today, we can see this little yellow shaded area here. Market sitting just underneath that little yellow shaded area. That is right around 1.1060 down to 1.1050, 65, 50, somewhere in that area, the yellow shaded area. Staying underneath that today clearly gives you a little bit more of a downside perspective than an upside. So staying under the yellow zone could become opportunities to go short. Your risk, of course, is that it breaks back above 1.1065 and starts going back higher for the euro dollar. GBP USD, Great British Pound, US dollar. Of course, the big red candle was all the rage a couple of weeks ago, but now we've just been kind of bouncing around inside this black box. You see it found some congestion there, broke, made a new low, back up, and now we've been just kind of bouncing around over here on the right hand side for the past 1, 2, 3, 4, 5 days as well. Clearly, we have a more bearish bias here for this currency pair. Underneath 1.3200, we'll likely look for it to head lower. If we ever see the breakout and turnaround for this currency pair and gets back above 3475, 3500, above that little black box in the last several highs that we've seen there, we could be looking for some reversal. Let's take it on down to the 4-hour time frame. We saw the market attempt to get underneath there, underneath the green shaded area in the 3200 level. Short-lived, back up here in towards the 3290, 3300 level. The yellow shaded area is our current area of resistance. If we can get back underneath 3200, I believe we're looking for the fall back down towards the 3100 level, which is the purple shaded area. So if you're looking to go short, rally into the yellow zone becomes an opportunity. Break under the green zone becomes an opportunity for the GBP USD. I don't think there's any real significant reason to go long quite yet on the GBP USD. Moving over to the US CAD, we've been following this pattern here. We had the downtrend, the red trend line, and then kind of a rising or ascending triangle here pattern on the daily time frame. Along the blue trend line is the rising lows. Along the black trend line right here, the solid black trend line, is steady resistance highs. So as long as it's in this pattern, I think we're buying support into the blue trend line, targeting the black trend line, breaking the black trend line. We look for a breakout higher and a turnaround of the trend. And all of that changes if it ever breaks underneath the blue trend line. Let's zoom it in a couple of times here. Of course, as I mentioned, the orange shaded area, the blue trend line, are very important for support right now. Staying above that, we look for buy scenarios here for the US CAD. If it breaks underneath, we'll call it 2840. 1.2840 is the support right now. That's the orange zone. Then we look for reversal to go back down. Above it, as we've seen, pushing back towards the 1.2960 level, the blue zone, is our current resistance, 2960 to 2990. Anything above that, we'll look for the continuation towards, we'll call it the 1.3100 level right now. But anything above 1.31, we could start looking for the continuation of the upside here for the US CAD. Moving on over to the USD JPY. Long term, we have seen a downtrend. That's the blue trend line here. Long term, a downtrend. But over the past several days, we have seen a little bit of a turn of direction, haven't we? We found support lows down here right around the mid 100s, 100.25. It found support, started reversing last week, and just continued to pressure higher. Right now, finding resistance right around the 105.90, 106. 0.30 level, the purple shaded area. That's clearly your current resistance. You can see resistance back here, support back here where the red circle is. So 105.90, 106.30 is the purple shaded area, and that is your resistance. I don't think you want to buy it too close to that because obviously that's resistance. The next time to buy it would be on a dip into support. That's the blue zone down here closer to 105.0, or it finally breaks above that purple shaded area, which it hadn't done. Take it down to the 4-hour time frame, and even down here you can see we're just kind of in a period of congestion or consolidation right here between the purple and the blue shaded area. So we need a breakout this week. We need it to likely either dip to the blue zone to give us a buy, break above the purple shaded area to give us a buy, or at least if we're going to see a reversal, break back underneath the 105 level for the US yen this week. Moving on over to the AUD USD, Australian versus the US dollar, a little bit of congestion zone up here at the top right hand corner of the chart as well. The blue box is really what we're going to focus in on this week. Let's go ahead, of course, let's first off mention the fact that we have been in an uptrend. Look at this green trend line right here. Along the green trend line, we've been in an uptrend. So we're in consolidation, congestion at the top of the rising trend. So if we're going to focus on a direction, I think you still want to focus on buying because there's no evidence of reversal quite yet. Let's go ahead and zoom it in a couple of times here on the daily. Take a look at that. You can see just kind of been bouncing around between 75.70, the bottom of the pink zone, and 76.80, which is the bottom of the green zone. So right now that is resistance at the green shaded area, and we have support at the pink zone, and that's not too hard to see over the past 1, 2, 3, 4, 5 days. A break above the green zone, we'll look for continuation of the uptrend. Break below the pink zone, we look for a reversal of the trend and back down into the low 75s or into the 7400s for the Australian dollar. So really a breakout of this blue box is what we're looking for this week. 4-hour time frame, you can see it bouncing around here. If you've taken a buy at the pink zone, protect profit as it goes up here towards the green zone. If you've taken a buy, anything breaking underneath 75.70, I think is the risk there. You know, if we take a shorter term trend line, we can see that even here with this trend line, we're underneath there. So I'd be a little bit cautious about buying it. We are starting to create a little bit of a lower high and lower low. So clearly, the next opportunity for reversal might be the breakout underneath 75.70, and that could be the clue that we're looking for this to turn around and go back down for the Australian dollar. Moving over to the NZD USD, similar situation. We have the market falling from resistance highs. We've been in a long-term uptrend. If I zoom it out like this, we can see we've been in an uptrend along the black trend line. So we zoom it in. We know that the black trend line is down there. We've seen a little bit of a rising trend along the red trend line, but we saw a reversal last week as it hit the 7,300 level and started coming back down. For those of us that have been selling since 7,300, you're in profit protection mode, hopefully, as it continues to pressure back down. 4-hour time frame. As we get down here to the 4-hour time frame, let me zoom out just a little bit. We can see we broke underneath this red trend line last week. Several of us taking significant sells and having significant profit on the way down. Under the blue zone, it broke down underneath there, down to the yellow zone. Right now, we're currently underneath the yellow zone. So that's going to be our resistance for the day today. That 7,100 to 7,125 is the yellow shaded area. Staying underneath there, we target back down to the purple shaded area. Anything underneath the purple shaded area, we're going to continue down here towards the orange shaded area, which is down here closer towards 69.80 at the very bottom of the chart. And anything underneath there, we look for continuation of the downward slide. On the upside, I don't think there's any real reason to believe that this is going to turn around and go back up yet, but at least at this point, watching for clues and hints to reversal. But I think focusing in on the selling right now is still the main focus for the New Zealand dollar this week.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.